Hi, this is Doug Jones at Mortgage Magic. You know, one of the things that banks do and lenders do and everybody does to market their loans is they market APR. They say, hey, the APR is this and come get a loan now because the APR is low. And I want to show you that APR is something really, in a way, you want to discount unless it's a 30-year fixed rate loan. Now you can compare an apple to an apple. So if you have two of the similar type loans, you can compare the APR. But I want to show you why APR is not a good index in all cases. Here's a situation where my client received from the bank in the mail, and it showed the annual percentage rate, the APR, of 3.756. Now this is a $700,000 loan, and there's no way in heck anybody's going to be able to pay that lower rate on a $700,000 loan. So I want to show you what happens though. This is a loan that is an adjustable after 5 years. Now the client's getting a $700,000 loan. He's getting 4.5% fixed rate over 5 years, interest only. Excellent, excellent loan. Then it becomes an adjustable rate loan. Well, adjustable rates, they move. You know, kind of imagine the ocean moving up and down. Well, that ocean moving up and down, that's the index. And right here I got index 1.15, and here's the ocean here's the boat. Well, your interest rate is two things. It is the index plus the margin. Now my customer has an excellent loan, and because he's got a low margin. So his index is 115. That's on the 1 year LIBOR, okay? And his margin is 2.25, so that equals 3.4. So if that loan could be fixed in time, it would be 3.4. But the problem is over the next few years, that index right here is going to go up. That ocean level, that water level is going to rise. And how do I know that? Here's the LIBOR since the year 2000. In 2000, the LIBOR was a 6.8. Now this same client with a 6.8 and a 2.25 comes to a 9.05, you see. But the LIBOR has gone down to today it's 1.15. The problem is this is historic low. This is historic low. And this is going to go up, so the client is not going to get a 3.756. Now my guess is LIBOR is going to settle somewhere in the 4s over the next 15 years or so, in the 4s, maybe the 5s. So the client's going to be in the 6 or 7% range, which is still an excellent rate. But all I'm telling you is that when you get an APR and you hear banks advertising the low APR, you know, it is a low APR, but the math shouldn't be done this way. There's no way that this should be what is projected in the future. So just be aware, and all I want to do today is tell you to look at the APRs and realize that APR is not really an interest rate, and this is required by banks, by government, to do it this way. So they're not cheating you, they're not lying to you. That's the way we do it, but it's also wrong. So what I'm telling you is be aware of the APR and talk to your lender, talk to your mortgage broker to make sure you understand things completely clearly.